Hello, traders. It is 8:01 a.m. Chicago time on CPI day, Thursday, the 12th of January, 2023. Thanks for joining me today on episode number 2391. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. As I said before, CPI day today, overall, the numbers came in almost perfectly in line, perfectly synchronized, and the market had a small pop, big drop, and we are back to the SOC here, the scene of the crime, or the point at which the auction was interrupted, and we are continuing to chug along at 4,017 in the S&P and over 11,500 in the Nasdaq. Dow's close to 35,000. Russell pushing 1871, and the you notice the DAX and the Euro stocks are even higher. A quick note here about European stocks you see in the event risk or economic events. European stocks have been much stronger this year. They're up about 11% over the last couple months or so. Pretty much outperforming any other market out there currently, and this is being the story behind this. Of course, everybody wants to know the why, but the story behind this is, one, the energy impact from the Russian war and the embargoes and so on has not had that big an impact, as the winter in Europe is warmer than anticipated. So there's less risk premium, fewer fears. The other piece is that banks are pushing higher. If you look at the DAX, the banks in there are pretty strong. Banks are pushing higher, anticipating ECB continuing to raise prices, raise interest rates. And then the other piece is the China reopening is pretty big for Europe, in that luxury retail and general retail is taking a big boost and lifting because these indices are not so concentrated in these mega caps or big name or very focused indices. Banks do have wield some weight in there and stuff. So Europe, if you're trading European markets, or if you're invested in a diversified portfolio, you might notice Europe popping a little bit. So that's that. CPI came out. The numbers for core CPI month on month, 0.3 in line. Weekly earnings month on month came in at 0.1% versus 0.2 last. Core CPI year on year came in at 5.7% in line, and US CPI year on year 6.5% in line with 6.5 expected, and the prior 7.1. Initial claims came in strong, 205,000 versus 215,000 expected. And we did get some comments from Feds Harker, who is a voter. Feds Harker says hikes, expects hikes. It says likely hikes a few more times in 2023 to shift down. Expects future hikes to shift down to 25 basis points. And we saw a quick pop higher on that. Maybe not. The SOC for the ES on the release was 4,009 and a quarter, and we dropped all the way down to 39.54, and then now we're trading at 40.16 with a high of 40.21. So the auction was going, popped a little bit, dropped, came back to the SOC, has pushed higher, and is sitting and trading the zone of the SOC. So the market's really liking this 4,000 handle now. Imagine we were just at 3860 and 3,900 just a few days ago. So the S&P currently is in a multi-distribution profile, pretty heavy volume, 410,000 contracts. The inventory, believe it or not, the inventories break even very interesting profile in the overnight session. We have the point of control, the full session VWAP, full session mid, prior settle, prior close, prior high, all within range, within the same range, within about a 10-point range. And so this looks like, if you've ever traded options or looked at options, this looks like a butterfly risk profile, like a butterfly spread, option spread, where it's like thin on the outside, the wings, and then it kind of sticks out in the middle. That's what we have for a profile. I've never seen anything like this on an economic release. It's just, to me, it really kind of looks like it might ricochet back to towards the 39.90 this morning. We'll see what happens here. We're gapping higher, and we'll talk a little bit about what we did yesterday, but we are gapping higher. And the expectation, the initial expectation is that we would get responsive, and for that I expect that we would move back below the 4,000 here early. So we'll see what goes on. What's left for today? We have Fed's Bullard at 11:30. We have Fed's Barkin at 12:40, and then a balanced trade out of China at 10 p.m. Eastern this evening. So that's that. That takes care of this pre-market summary sheet. Let's take a look at what we have in terms of the auction itself. Beautiful breakout day last Friday. Continuation, strong close on Friday. The VPOC was at the high. It's not so for the POC on the time-based profiles you see here. And then we had this kind of a turnover day Tuesday, and then yesterday we opened at the high end of the range. We held the prior high. In what was just a terrible choppy open yesterday, and then we ended up closing strong. And those of you who are here, I asked you yesterday what the key target is above in our price map, and many of you answered correctly, and that price is 39.92. The high yesterday was 39.91, and we closed at 39.90. We settled at 39.90. So this is the Nasdaq. Let me switch. It's the same, looks the same. So 39.90 is the settlement price. 39.91 is the high. And we got awful close. I think the high was the high 39.91. I think it's 39.90.70. So 39.92, where do we get that from? And there it is. Balance, high kurtosis. We talked about that a lot. I keep emphasizing, hey, look, I want to make this statement. There are many people on YouTube that get a lot of views and all that because they're showing how they're trading, and they're talking about funding programs, and they're talking about some piece of software, some indicator or whatever. There's a purpose to their presence, or they're going to convert their followers into a room or whatever, and whatever. People do what they do. That's fine. I'm not judging that. But the thing that's consistently missing across the board is an important understanding of how the market actually operates. So we could get distracted by software or some indicator or some spider profile or whatever, or gamma based positioning and stuff like that. But what I'm covering every day, which is incredibly unsexy, but is the core of what we do as traders, is this. It's the auction. It is being able to see what the market has done, looking at the quality of the trade and what it's trying to do, how good of a job it's doing, and what it's likely to do next. That's the core. And we call, if you can answer all those questions, we call that gaining context. As soon as we gain context, so if you tell me that every time a dictator is removed from government, there are 4 years of turmoil and probably civil unrest, civil war, whatever, and then there's a fatigue from war. People look for peace. External powers come in and try to restore a constitution, civil law, and so on. And then the market starts being established and a stock market's created. Then you have this investment. And so if I understand that process, if I understand the narrative of what this country's history is, what it's going through, and how good of a job it is doing in rebuilding and maintaining peace, when I go to invest in this newly formed country, I can do so with confidence, right? Doesn't mean I won't lose. Their past performance is never necessarily indicative of future results. But this is like my thesis in investing in this country, is that historically this is what happens. And so this is context. This is trading on context and narrative. And if you look at what Warren Buffett and some of the bigger long-term investors are, they kind of look at the story, then they look at the numbers, which is the technical part of what they do, and then they don't care about price and where it is today. They invest, and they've defined risk. They invest, and it's done. And this is the part that's missing. So what did we do? High kurtosis balance down here. Breakout day, which I've been talking about again and again and again last week. Hey, this thing is really, really coiling. The more kurtosis we have, the bigger the breakout. And we got the breakout on Friday on non-farm payrolls. Breakouts generally follow continuations. We expect a higher high the next day. Monday went a little farther than I expected. Tuesday is what I expected on Monday. Tuesday, balance day, coiling, and then yesterday, gap up, retest down, and then finish right on top of the last balance, right? The point of control of the last balance, which is 39.92, and it did so right on the close yesterday. So this is done. Boom. This is done. Now, this being done is a problem, because now we've accomplished a major milestone. We have this number behind us, and we are in this large balance. So is this likely to be choppy and kind of back and forth, kind of trading this balance zone here, which could give us, days and days of just choppy trading since we accomplished this? Or is the balance price up here too rich, and therefore we get a turn lower and we start testing down? That is to be found out today. The picture is a little bit murky now. It's a little bit more difficult to read right now. So I need to think like a very, very short-term trader coming into today. Here's the S&P dropping through 4,000. Remember, I said I'm expecting this thing down to at least the VWAP point of control, overnight point of control mid area, which we're coming into. So I'm expecting this thing back into the 39.90, 39.88, 39.90 area this morning, and it's already making that move. Here's what that looks like in the active chart. So there you have it. See how this is kind of it's got wings, a body, and another wing. This is the overnight profile. It's got the point of control on top of it. VWAP is moving up. There was quite a bit of volume here that dragged VWAP up. Mid is in the area. So now we have VWAP at 94. We have the prior high at 90.75. Settlement at 90. The full session mid at 88. And the overnight point of control at 88. So I'm expecting us somewhere between 94 and 88. This zone here is one to really watch today. That's going to be a very attractive zone. It looks like the market is already taking away our gap to settle trade. We're looking for, I love gaps. We were looking for, if it had opened way up here, I would look for weakness retesting the high. And as soon as it turns over and it starts taking out the opening swing low, I would be looking short and targeting 39.90, and it's kind of taking that trade away. So that's the key trade this morning, and it's being stolen right now. So that's the S&P. Here's how we traded yesterday. Very, very choppy, as I said. Let's pull this up a little bit. Very, very choppy. It opened up, and it was just like just very muddy trade. We extended the IB low, then we pushed the IB high. We balanced off the IB or bounced off the IB several times before making a run into the close to the 39.90. You could see that we finally got to the 39.90. Pretty good volume on the close there, creating this high volume node, and that's the attraction point this morning. And then on the reopen, we just held steady. We held steady in this area all the way to the breakout, the beginning of the breakout into the CPI release. So we held steady, and then we started to run up about 10 minutes before the release. For some reason, the market started just walking up on its own. We saw that in the Russell. We saw that in the Nasdaq, across the board, crude as well. And then as soon as the number came out, it exploded to the downside to 54. Remember, the 39.50 is important down below. Went to 54, consolidated for a while in the middle, and then it started to run back up. So the overnight session is very busy. This is a point and figure chart, 8-tick increment point and figure chart. And so there's a lot of bars between the release until now, and now we're pulling back exactly to that middle. This tells us that we are back in balance here. We are back in balance. We're in the balance of the overnight session, and we are back in balance of that big composite. So expecting a pretty whipsawy, I don't want to say violent, but relatively violent open. So hands off the mouse on the open is what's recommended this morning, just like I recommended yesterday not to trade the first 15 to 20 minutes because it was expected to be pretty choppy, and it was very choppy. Let's take a look at the Nasdaq real quick. Start with the TPO chart. For the big picture, the Nasdaq, same kind of deal. The Nasdaq ended up, breaking out, doing the same thing. Nasdaq held the last high pretty well yesterday and finished pretty strong. So we expected it to run up in the overnight session, which it did. The Nasdaq was actually relatively stronger than the S&P yesterday because it didn't break the IB low. It held pretty well, and you could see it was well bid, well supported throughout yesterday's session. The Nasdaq is below settlement, but it's got a lot of noise. In the big picture, though, in the Nasdaq, in the big picture, it has not accomplished its return to home base here at 11,800. It got to about 11,500 in the overnight. I'm missing the last day again. It did this yesterday. I think I'm switching charts while it's loading, so it's losing data. Yeah, I'm missing a day here. I got to check on that. The Nasdaq kind of settled up here at 11,500. Still has room in the Nasdaq. Any run up in the Nasdaq would be targeting the 11,800. Let's take a look at where we are in the Nasdaq currently, and it's the same story, same kind of scene. We've come back to full session mid. We've come back to full session VWAP. We've got a point of control right on top of where we are now between 11,460. It's really 11,450. 450 to about 500 is that zone in NASDAQ right in here where it's likely to be pretty choppy. So same thing in the NQ. It's your guess is as good as mine. Your guess is as good as mine as to what the NASDAQ's likely to do in today's session. I'm kind of neutral in my posture. The one-time framing says higher, so the overall investment mode is to keep buying, but on an intraday basis, it's really hard for me to tell what the NASDAQ is likely to do. Quick look at crude oil. Crude just chugging along. Crude, remember, we expected the target yesterday was 78, which it got. It pushed through. It has opened and is responsive this morning. Looks heavy. Crude is in a gap is in an opening gap, and I'm looking to see if crude gets continuation back down to 78. That's the key target this morning, 78 even in crude oil. We did clear the 76.50. I talked about this yesterday. Once we clear the 76.50, look for 78, and it pushed right up to it yesterday. In crude high yesterday was 77.84, so it missed it by 16 ticks. Crude is on point. It's in the upper distribution and is in upper balance now, and I'm expecting the same thing in crude to kind of, it's priced in some important facts, and now I'm expecting crude to chop around a little bit. But crude is in a better situation than the indices in that it is opening in a gap, and it gives us this opportunity to reprice the gap, or for an attempt lower and in a gap and go situation, in which case we would start to look up into the 81 and then look for that 81.50 high right back here as a key target, which is about $3 away. So that's what we've got today. I know there's a lot to cover here. I'm trying to cover 3 products, but the auction is the same. As you notice, the auction is the same across these products, and I'd be lying to you today if I said that, oh yeah, it's really obvious what the first, second scenario are. Pretty good trading, by the way. Not that I would recommend it. Pretty good trading on the CPI release. A couple of really good setups in here. And what we're doing currently is we're holding a strong bid on small lots, but look at what the large, very large and large lots are doing. They are flat. This is contributing more to the idea that it's likely to be a small lot chop controlled market on the open, and more impetus for us to kind of stay out, at least at the beginning today at the open. Just observe, see where it finds a base. You know, does it break the 85 in the S&P down here? Does it go down and break the 85 and start running down again? Or does it hold steady? Does it check both sides? Does it make higher highs and lower lows and higher highs and lower lows? In which case you stay out of it. But overall, this is telling me that it's likely to be a pretty rough open. The Nasdaq's a little bit stronger. It's got the large and very large lots supporting the buy side. So the Nasdaq is more likely to hold a base and then look to run higher at some point in the session. We'll talk about it tomorrow once we reconvene. Good luck. Don't forget to hit the subscribe button. If you have not subscribed to the channel and you don't see a subscribe button, go to the top of your live chat on YouTube, open up the little blue pinned message and click on the link in there. It's ft71.com YouTube, and it'll automatically subscribe you after a warning that you're leaving YouTube. You can click yes, and then you can subscribe to the channel. That way you can get alerts when these videos are posted. Good luck.